Joe Biden signs the highly awaited executive order regarding cryptocurrency and the market reacts positively.
Microsoft and Astar Network join forces to define the future of the Web3 space.
Dubai regulates cryptocurrency and announces a new digital asset law.
And in this weekly analysis, we studied the cryptocurrency market. Bitcoin finds itself in a volatile state, and the concerning inflation data brought on by the war in Ukraine continues to generate uncertainty in the markets.
This and more here on Nebolus' daily newscast.
The US has decided to regulate the crypto world. The White House has finally released its cryptocurrency order to the public. Joe Biden signed this order in which he detailed how the industry could be beneficial to the nation as well as its citizens.
This decision was highly awaited given we're talking about one of the most important world powers. The market responded positively to this release.
The document emitted by the White House provided an insight into the US government's vision for the future. They believe that the digital assets present an opportunity to reinforce the nation's leadership both in the global financial system and the technological front. However, they also stated that it had substantial implications concerning consumer protection, financial stability, national security, and climate concerns.
Following a similar trend, Microsoft, which is based in the US, has laid its gaze on a new project. One of the world's biggest tech companies and solid market leader has announced that it will be supporting Astar Network to build and implement the future of Web3.
After working together on the Astar Incubator program for some time, Microsoft will be providing a wide range of resources, including marketing support and a network of mentors to select startups in the program to help them succeed in the global marketplace.
The aim is to nurture potential and up-and-coming entrepreneurs in emerging sectors of the Web3 space and accelerate its adoption. With the addition of Microsoft to this project, everything that surrounds Astar has the official support of one of the most innovative and technological companies in the world.
In terms of regulations, countries and cities are trying to keep up with the advances in crypto assets. As reported by Nebolus, over the past weeks we've seen how various territories such as the United States, Lugano or Thailand have moved to regulate the crypto world. Today, however, it seems that it's the turn of Dubai.
The Prime Minister of the United Arab Emirates and ruler of Dubai, Mohammed bin Rashid Al Maktoum, has signed a virtual assets law in which he hopes to create an independent authority to supervise the cryptocurrency sector.
These regulatory foundations are intended to make Dubai more receptive to cryptocurrencies and establish its position within the industry. Just in December, the country moved to regulate cryptocurrencies when Binance partnered with Dubai World Trade Center to turn it into a comprehensive crypto zone and accelerate the adoption of the industry.
Speaking of political decisions regarding crypto, South Korea announces its new president, who won the elections in the Asian country after promising to institutionalize and promote the local cryptocurrency industry. It should be noted that 10% of the population of South Korea, which totals to more than 5 million inhabitants, own cryptocurrency.
The candidate of the People's Power Party made promises in favour of cryptocurrency in an attempt to win the votes of the youngest and the most expert population in the sector. Previously, the government took confusing steps in this regard, coming close to imposing a 20% tax on digital assets, while they investigated the use of their own CBDC.
The president has promised to establish a basic law of digital assets, which will emphasize the recovery of funds lost in illegal transactions and scams. In addition, he proposed the idea of creating a government agency dedicated to cryptocurrencies and non-fungible tokens.
In other news, Crypto.com continues to expand, joining Singapore Blockchain Association. The objective is to train its members and empower the advantages of the blockchain. Specifically, it attempts to promote the development and evolution of companies which boast members such as Algorand, Visa or Tesos.
Singapore seems to want to position itself as one of the world leaders of cryptocurrency. 2 years ago, the country enacted a rule to regulate the use of digital assets. Since then, companies such as Swiss bank Sygnum have been authorized to operate within the country. These authorizations are granted by the Monetary Authority of Singapore.
Crypto.com continues to make efforts to position itself as one of the leading exchanges in the market. Its investments in advertising are very well known. Last year, for example, Matt Damon starred in a Crypto.com spot, and the famous Staples Center in LA was renamed to Crypto.com.
Speaking of Crypto.com, let's move on to the company's latest collaboration. Famous basketball player LeBron James jumps into the world of NFTs by partnering with Crypto.com. The profits will be donated to the LeBron James Family Foundation to provide education grants to students in his hometown.
Through an ad that featured young and old LeBron James talking about making difficult decisions in his life, a QR code was hidden in which those with a keen eye had the opportunity to obtain a free NFT from the collection.
The code led to a private registration website. The lucky few received one of 5,550 NFTs completely free.
And with this, we draw the newscast to an end. Don't miss the latest stories on Nebolus.com.
And make sure to check out our weekly special this Sunday, Before Bitcoin, in which we look at the events that gave rise to the blockchain.
Up next, the weekly analysis.
Until Monday. Volatility is still present within the cryptocurrency market, and the war is causing a very worrying inflation. The data leaves us with a crystal clear message. Difficult times are ahead. In this weekly chart, we can see that from February 28th to March 6th, there was an inverted hammer candlestick between $37,800 and $44,500. If this type of candle appears after weeks of correction, it tends to be a sign of compatibility with the technical analysis. This week, we can see another inverse hammer being drawn, and for the movement to be confirmed, we'd have to see a full-body green candlestick which is able to close at least at the $41,000 zone. Let's not forget that we're still trapped in a macro range between $34,000 and $45,500. If we look into the moving averages, we can see that we're found on no one's land between the 50 and 100 periods. What we need to keep an eye on is the potential 20 and 50 period crossing. As we know, in order to confirm the downtrend reversal, we would have to see a downward crossover between the 20 and 50 period moving averages, leaving the 50 period average in yellow above the 20 period average in red. In the daily time frame, we can see that a double bottom pattern was being formed, although it hasn't been confirmed just yet. Something to keep in mind is that for this pattern to be confirmed, it must break the top part of the $45,000 zone. At this moment, however, there could be an accumulation zone being formed. While there could be a symmetrical triangle being formed with this pattern, the price would have the same chances of breaking upwards or downwards. It could even result in an ascending triangle. Although what's clear is that we'd have to be situated within a macro range. If we lost the 0.78 Fibonacci zone and once again reached the previous zone of $33,000, this triangle would transform into a parallel channel. The previous day on the 28th, we saw a strong upward movement in the price, although 4 days later it carried out a similar downward movement. 3 days ago we had the same kind of situation. On March 9th, we saw that the chart drew a green candlestick, but the next day it carried out the same movement but downhill. What does this tell us? That we're found in a situation where volatility dominates the market, although within that macro range. If we take a look at the moving averages, we can see that the scenario taking place is that of the one mentioned in some of our previous analyses, which confirm the daily time frame. As we can see at this point, the moving averages already go from largest to smallest, 200, 100, 50, 20. Either way, it's true that the 50 and 20 period have just crossed each other and are still very close to each other. In fact, this is an example of volatility, which is why that downtrend confirmation is a delicate position leading to indecision. As we know, if the price breaks the important support zone of $37,000, located at 0.78 Fibonacci, it could lead towards the $34,000 zone. And let's pay attention to that bearish divergence which is taking place in relation to the RSI. This divergence could have alerted us on March 1st that the price would lose strength, and although it's true, it's not a very evident divergence in a highly volatile context. The averages could move within this zone marked in a pink circle. If we see candles closing above that confidence zone, the price could go towards that resistance zone of 41,000 in the short term. Now let's move on to the SP 500 index chart, one of the most important ones needed to understand traditional markets. In this daily chart, we can see that a bullish divergence has taken place from January 25th to March 8th. If the SP starts to dominate that 4,200 point zone, the next target would be 4,400 points, where we'd find the next important resistance. And the market sentiment based on the Fear and Greed Index continues to display signs of extreme fear. While some days the general feeling was just fear, today it's become extreme fear. Despite the market sentiment, let's look at the state of Bitcoin holders. In this chart, we can see that Bitcoin holders continue to withdraw cryptocurrencies from exchanges, which could indicate that they're still storing them in cold wallets, and therefore no intention of being sold. And of course, if Bitcoins are sold, the price could maintain itself and even rise. In a macroeconomic context, in just 5 days, the Federal Reserve will meet in order to reveal their decision around the rise in interest rates and the cessation of monetary stimuli. We must pay attention to this because the rise in interest rates can not just be of 25 points, but of 50. Another worrying element is that of inflation. In the United States, the Consumer Price Index in the month of February is located at 7.9%, and the price of energy has risen by 25%. Something to note is that used cars and tractors in the United States has risen by 41%. In Europe, however, interest rates are maintained, as announced yesterday by Christine Lagarde, the president of Central European Bank. Some countries, such as Germany, do not completely agree with this measure, as it could maintain inflation levels at a really high rate. Other countries, such as Portugal or Greece, are in favour of low interest rates, as they fear stagflation. And what is stagflation? It's a macroeconomic phenomenon in which there's no economic growth, but there is a rise in prices. In short, it's a combination of stagnation and inflation. This week, in short, uncertainty and volatility have been in the spotlight, and markets brace themselves for tough times.